Okay, question number 4 of November 2020. Question number 4 of November 2020. It says, cost for decision making can be classified according to relevance. A cost is relevant if it can be changed by a decision taken. In reference to the above statement and using suitable examples, explain the meaning of the following costs and state whether they are relevant or not relevant for decision making. So the first cost is called sunk costs. Sunk costs. Now, this sunk cost, it is also known as past costs. It is also known as historical costs. It's also known as historical costs. So those are the three names that go hand in hand to explain the same thing. And write this. This is a cost which is already incurred and paid for, already incurred and paid for, and there is no future action or event that can change the incidence. Of the cost. That is the meaning of a sunk cost. This is the cost which is already incurred and paid for, and there is no future action or event that can change the incidence of the cost. It is irrelevant. In decision making. It is relevant in decision making. It is relevant in decision making. So that cost is relevant when it comes to decision making. The other one is opportunity costs. Opportunity costs. Opportunity costs, and write that this refers to the benefits lost for not choosing a particular option. It is a relevant cost. It is a relevant cost in decisions making. It is a relevant cost in decision making. So that is what we mean by opportunity cost. This refers to the benefits lost for not choosing a particular option. It is a relevant cost in decision making. So I believe that we have finished writing that. Is that so? If you have finished, write yes. We have finished copying, write yes. Okay, Simon, good through. have you finished? Jamal, welcome. Okay, thank you. All right, let's go to question part B. Part B of the question says, a VADA Limited operates 3 segments. The income statement below for the segments imply that the company could improve profitability if segment X is eliminated. Income statement for the year ended at 1st of March 2020. We have X, Y, Z. We have sales. We have the cost of goods sold, sales commission, contribution margin, general fixed overhead, advertising expenses, and net income. The general fixed overheads relate to the salary of the chief executive officer, which has been allocated equally to the segments. The advertising expenses are specific to the individual segments. Now prepare a comparative income statement for the company as a whole under the 2 alternatives. That is when segment X is retained and when segment X is eliminated. Advise the management of a VADA Limited or the effect on profitability assuming X is eliminated. Okay. That's a minute. So the question is on what we call drop or retain decision. Drop or retain decision. So here we have details. So this one is retain segment X, and I'm working with my figures in millions. So sales, when I retain, will be 87 plus 210 plus 200. Nitumie hiyo jibu. Send me that answer. Then when I drop segment X, give me this answer. 87 plus 210 plus 200 is equals to what? Yes, Paris, 497. Good. So 497. But if we drop segment X, we will have 210 plus 200. So that will be 410. If you drop, you are going to have 410. Cost of goods sold. Cost of sales, we are going to have 67 plus 82 plus 85. Add them and give me the answer. 67 plus 82 plus 85. Said that answer. Yeah. Is it 284? Someone else? Yeah, Jamal, 234. Opio, check yours. It should be 234. 234. And yeah, good. Then when we decide to drop segment X, we are going to have 82 plus 85. 82 plus 85, what do you have? 82 plus 85 is what? +82 plus 85 is 167. Good. You can see the figures coming. 167. Good. Then we have sales commission. Sales commission, it is 12 plus 22 plus 20. Add them and give me the answer. Same 12 plus 22 plus 20. Yes, Jamal, I can see 54, good. And then if we drop, takuwa na 22 plus 20, and that is 42. That is 42. Then we get a figure called contribution. So contribution, you are going to get it like this. Contribution, you will subtract cost of sales and commission from sales. Subtract 497 minus 234 minus 54. What is the answer? $497 minus 234 minus 54. Yes, Jamal Perez, good. I can see 209. Let's go to this other side. We say 410. 410 minus 167 minus 42. Send me the answer. 201, good. So we have 201. Then put the general fixed overheads. General fixed overheads. Now, general fixed overheads, if we retain, we have 20, 20, 20. So 20 plus 20 plus 20, that is 60. And now, you can see for additional information, we are told the general fixed overheads relate to the salary of the chief executive officer, which has been allocated equally to the segments. That means that this cost applies whether the department, a particular department is there or not. Because you can see they relate to the salary of the CEO. So that then means we are still going to have 20 plus 20 plus 20, and therefore we charge 60. So it's not going to change. Then we have the advertising expenses. Advertising expenses. Now, advertising expenses, we have 6 plus 18. So if we retain, that is plus 0 here, that will be 24. But if you happen to drop, Maureen, we are in the paper of November 2020, question 4B. November 2020, question 4B. Okay. Now, according to information 2, the advertising expenses are specific. When we say they are specific, that means when that department is not there, that cost will not be there. That cost will not be there. So here we will just have 0 plus 18 plus 0, and that will be 18. So based on that now, give me the net profit. Based on that, you shall give me the net profit, and that will be the end of the table. You will give me the net profit. Uh-huh. 271. You're supposed to subtract. Ukisema 209 minus 60 minus 24. This one is 125. Na yule mwingine useme 201 minus 16 minus 18. 123. Yes, Simon, 123. Good. $123. So then the question is, advise the management on the effect of profitability, assuming that X is eliminated. X is eliminated. So you are supposed now to offer your advice. To offer your advice, and the advice should be stated like this. Do not drop segment X, since doing so will make the profits of the company to reduce by 2 million. To reduce by 125 minus 123, which is 2 million. So we should not drop that, because if you drop it, the profits of the company will drop by 2 million. The profits of the company will drop by 2 million. So are we okay with that? If you are okay, say my yes so that I can proceed. If you are okay, type yes so that I am able to proceed. If not okay, you raise your question. Maureen is okay, Simon is still copying, Jamal is okay. So we will finish up. For the advertisement, you're asking why we did not add. It is because we are told it is specific. By specific, Paris, that means it is only there when that department is there. So if that department is not there, that cost will not be there. That's why it is here when we are paying, but when we drop, it is not there. Is that okay, Paris? Yeah, good. Let us proceed then. Naona kila mtu ako sawa. So the next question, number 5, says, question 5, in the context of labor remuneration, examine 6 limitations of co-partnership and profit sharing schemes. So we are told to highlight limitations of co-partnership. Co-partnership and profit sharing schemes. And profit sharing schemes. Now, right from the word go, you should know that when we talk about co-partnership, is where people join hands together and they are doing something. And then what they get out of that, they share, either in the name of salaries or in the name of profits. That's what we call co-partnership and profit sharing schemes. Now, there are many advantages of that. There are many advantages, and equally, we also have disadvantages, and those are the ones that we are told to highlight. So, number 1, you write, it is very difficult to determine the percentage of profits, to be given to each person. It is very, very difficult. And the reason is people contribute differently. Another one is that since profits are shared at the end of the year, people may lose interest in the business. This is because you have to wait until the end of the year for you to get your profit, for you to get the share. And that may discourage people. Waiting for a whole year for you to get something, you may find people want to engage in other things, and thereby making the business to collapse. Number 3, profits are shared to everyone, since it is difficult to separate efficient and inefficient persons or partners. Yeah, when it comes to sharing, everyone is counted, everyone is a member. But when it comes to working, not everyone is a member. So we will have people who are efficient, we will have people who are inefficient. So profits are shared to everyone since it is difficult to separate efficient and inefficient workers. And that becomes a major problem. Another one is that high levels of suspicion since not everyone understands how finances are handled, how finances are and should be handled. Yeah, that's a problem, that we have high levels of suspicion since not everyone understands how finances are and how they should be handled. So utapata watu wanashinda wakishukiana, this one thinks the other one is misappropriating finances, this one is hiding money, this one is doing something not good. And when we have this suspicion, then you realize that people cannot go any far. The other one is that losses are not shared in equal measures, since some partners may keep off, during bad periods. So we are saying that losses are not shared in equal measures since some partners may keep off during bad periods. So shida ikitokea unapata wengine wanataka kutoroka, but wakati wa mavuno they are there. Another one is that profits do not always result from productivity, but also from other factors such as economic environment. So it's not all the time that you can say when you are very productive, the business made profits, because profits do not always arise or result from that productivity, but also from other factors. There are some guys who are well connected, and when you are with them in the business, then you make money. Others are not well connected, you cannot make any money, and so on. So those are some of the issues that we have. We are finished. You write okay so that we can proceed. Simon is okay. Perry is okay. Jamal. Maureen. Yeah, even Maureen. So let's proceed to the next question. Let's go to the next question that says, NF is an industrial lubricant which is formed by subjecting certain crude chemicals to successful processes. The output of process 1 is passed to process 2 where it is blended with the other chemicals. The process cost for the month of April 2020 was as follows. So we are given that. Additional information is that general overheads for the month of April amounted to 35,700 and is absorbed into process cost based on process labor. The normal output of process is, that is process 1 is 80% of input, while that of process 2 is 90% of input. Waste matter from process 1 is sold for shillings 20 per kg, while that from process 2 is sold for shillings 30 per kg. The output for the month of April 2020 was as follows. There was no stock or work in progress at either the beginning or end of the period. Okay, so let's begin with process 1, accounts. So we have details here. We have units. We have costs. And then we have amount. We have amount here. We have costs. We have units. And we have details. And this is process 1 account. Process 1 account. Process 1 account. So in process 1, we have materials. We have materials which are 3,000. And then the cost is 25. So 3,000 times 25 is how much? How much do you get? 3,000 times 25, good. I can see 75,000. Then we go to labor. Labor is 12,000. 12,000. Then we have process time. Now process time, you will get it as 12 times 2,000. 12 times 2,000, that would be 24,000. That would be 24,000. Then we bring the overheads. So the overheads, you will get them as let's have a working down there. Working for overheads. Okay, working for overheads. Process one will be 12,000. You divide by 12,000 plus 8,400 times 35,700. So give me that. How much is that? Yeah, good. 21,000. So here you utaweka hapa 21,000. But before we leave that, let's do for process 2. For process 2, it will be 8,400. Again, you divide by 12,000 plus 8,400 times 35,700. So this must be 14,700. 14,700. That is the working for the overheads. From there, we proceed. We are told by information number 2, the normal output of process 1 is 80% of input. So that tells you normal loss is 20%. So 20% of 3,000. So give me 20% of 3,000. 20% of 3,000 is how many units? 600. Good. So we have 600. And according to information 3, we have 20 bob. It is 20 bob. It is sold for 20 bob. So this must be 12,000. That must be 12,000. Then from there, we get the items that went to process 2. So process 2, the output is 2,300. 2,300. 2,300. So that means there is abnormal loss. Abnormal loss of 100. Abnormal loss of 100. So down here now we get working for unit costs. Working for unit costs of output and abnormal loss. Now this one will be 75,000 plus 12,000 plus 24,000 plus 21,000. When you add all those costs, then you divide all this by 3,000 minus the normal loss of 600. Minus the normal loss of 600. $55. Good. So that is 55. So 55, bring it here and here. So this is 5,500. Then multiplied by 2,300. That is 126,500. 126,500. So with that now, let's proceed and prepare process 2 account. Process 2 account, draw process 2 account. Process 2 account. You draw process 2 account. Process 2 account. So if you have finished drawing process 2 accounts, we always begin by bringing what has come from process 1. Process 1, tumeleta this one, 2,300 at 55, 126,500, 126,500. Then we bring materials. We have materials of 2,000 kilos, each at 40. So that must be 80,000. Then we have labor 8,400. Then we have process time. Process time is 20 times 1350. 20 times 1350 is 27,000. 27,000. Then I have overheads. Overheads of 14,700. Overheads. Then from there, we go to the normal loss. Normal loss is 10%. So it is 10% of 4,300. 10% of 4,300, that is these two. So that gives us 430. And we are told each unit is going for 30 shillings. So multiply that, ukifika hapo uniambie 430 times 30 is how much? 430 times 30 is how much? Yes, Simon, 12,900. 12,900. 12,900. Then from there, we have now the output. We have the output. So the output is 4,000. So that means we have abnormal gain. Abnormal gain of 130 units. 130 units. So unit cost will be 126,500 plus 8,000 plus 8,400 plus 27,000 plus 14,700. You divide all this by 2,300 plus 2,000 minus 430. So add that and give me the answer. Oh, sorry, there is this one, minus 12,900, minus 12,900. What are you getting? Maureen, you have 51.5. Opio and Jamal, what do you have? Maureen, work out again. I think your answer is not correct. Another figure? Yes, Jamal, 62.97. Maureen Bado, the correct answer is 62.97. 62.97. Maybe there is something, Maureen, you are not including. Unastahili kusema 126,000 plus 80,000. Maybe you are saying this is 8. It should be 80,000 plus 8,400 plus 27,000 plus 14,700 minus 12,900 minus 12,900. Then you divide by 4,300 minus 430. Maureen, confirm. Opio, we also need to hear you. Waiting for Maureen and Opio to confirm. Yes, Maureen confirmed 62.9. Opio. So that's 62.97. Put it there and also put it here. And then we multiply. You will say 130 times 62.97, 81, 86.1, 81, 86.1, and then on the other side, 4,000 times 62.97, 251,880. 251,880. 251,880. Then we are told to do abnormal gain accounts. Abnormal gain accounts. So let us draw that, like a small one. So we have details here. We are drawing now abnormal gain accounts. So we have details there. We have units. We have the costs. And we do have the amount. Then details. We have units. We have costs. And then the amount. And then the amount. And then the amount. So, when you have these abnormal gain accounts, you just go back here. You see this one is process 2. So now that this one was debited, you credit this one. So because of process 2, the units are 130, each costing 62.97, and the amount is 8186.1. 8186.1. Now that one, you cross it to P&L. You cross it to P&L. 130, 62.97, and then 8186.1. And that account stands closed. That account stands closed. Let us draw another one. Let us draw another one. That is abnormal loss accounts. Abnormal loss accounts. Abnormal loss accounts. So if you have abnormal loss account, we have details, we have units, and then the costs, and finally amount. We have details, units, costs, and amounts. and amount. So you can see this one, process one had abnormal loss on the credit. So the debit here will come and say process one, the units are 100 at 55, that gives us 5,500. And that one you cross it to P&L immediately, 155. And that account starts closed. Then we do the same for the normal loss. Normal loss account. Normal loss accounts. So in process one, we have details here. Then we have units. We have costs and amounts, details, units, costs, and amounts. So because of process one, we have 600 at 20. That gives us 12,000. Then because of process two, we have 430, each at 30, giving us 12,900. Now this one you take them to P&L and you only close the amounts. You only close the amounts, 24,900. Just close the amounts, 24,900. So ukifika hapo useme finish so that I can proceed. Okay, finished, good. So let's go to the paper of November 2019. November 2019, let's get there now. November 2019. So question number 1 says, summarize 6 objectives of management accounting. Objectives of management accounting. Objectives of management accounting. Objectives of management accounting. There are many objectives that we can cite, but the first one we can say is assistance in planning. Assistance in planning and formulation of future policies. Future policies. That is the first objective, assistance in planning and formulation of future policies. It helps us in planning. Number 2, helps in interpretation of financial statements. Interpretation of financial statements. It helps us to understand. It helps us to know what is written there. How do we interpret it? What does it mean? All those kind of things. Number 3, helps in controlling performance. Controlling performance. We are able to check the performance, how things are being done, and we're in a position to control how things are being done. So it helps us in controlling performance. Another one is assists or assist in organizing. Activities in the company. We are able to organize. We become people who are well organized because you are practicing management accounting. Another one is helps in finding solutions. Finding solutions for strategic business problems. For example, when we are asking ourselves, do we stop this? Do we drop this? Or do we retain? That's a business problem. Now, management accounting helps us to know whether we should drop or retain. When we have scarce resources, it helps us in forming what we call the product mix decisions. We are able to know which product and how many units we can produce. Another one is it helps in motivating. Helps in motivating workers. We are able to encourage our workers. We are able to help them to keep the momentum, to do better. And also, it helps in coordinating. It helps in coordinating. So those are some of the advantages that we have when we have management accounting in place. So I think we are okay and therefore can proceed to part B. Mantex Limited has two production departments, namely assembly and finishing. The company has been using a plant-wide predetermined overhead rate based on direct labor hours. The following estimates were made for the year. Mantex started and completed job 1005 during the year. The job order cost sheet indicated the following. We have all that. Now determine the total cost and the unit cost for each of the 2,000 units produced by job 1005, assuming that Mantex Limited uses a plant-wide predetermined overhead rate based on direct labor hours. Separate overhead rates based on direct labor hours for assembly and machine hours for finishing. Okay. So first of all, let us so the first thing, we have overheads absorption rates. Overhead absorption rates. First of all, let's have the plant-wide. So the plant-wide we have OAR being equal to budget overheads, you divide by budget labor hours. Budget labor hours. So the budget overheads, they are 300,000. And all the hours, as you can see, they are 75,000. So give me that amount. There's 4 shillings. Yeah, and I think we will stop at that point because I can see people have started leaving for job so that we don't disadvantage them. So we pick up from there in the next lesson. Thank you so much and have a good day.